Hey everybody, it's Pete. Good morning. Welcome to today's Stock Market Live on Stock Trading Pro. Today we got a bunch of stuff to talk about today. Last week's price action was just absolutely amazing. We're going to see, can we follow up on it? I think the tech stocks need to have a little bit of a timeout this week. The tech stocks were on fire last week. Bullish gaps, holding the bullish gaps, not pulling back for a second. The solar stocks as well were on fire last week. We have a ton of stuff to talk about today. You want to pay attention to today's entire video. Got my notepad out. Hopefully you have your notepad out. So I wrote everything down. I want to make sure I even put an agenda up on the screen today about stuff we're going to talk about today. So we're going to go right through everything. We're going to talk about sector rotation. We're going to get into hot stocks. We're going to talk about stocks with breakouts right now. Also, are we in a recession? Are we not in a recession? There's like varying definitions now. They're changing all over the place. Look, the definition was fine up until the last 2 weeks. That seems to have changed. We're going to go through the big picture. We're going to take a look at sector rotation. We're going to take a look at the Chinese electric vehicle stocks reporting deliveries. And every time they report deliveries, they rally and then they fall. Will this time be different? I'm going to be looking at them. I will tell you, just as an aside, again, everything here is for educational purposes, but I'm going to tell you straight up, XPEV, Chinese electric vehicle stocks, by far one of my favorite stocks to trade. Been having a pretty good year in that stock as well. Hopefully that hangs on. Three industries, three sectors we're going to break down today and give you the stocks that are complete technical analysis on those, what order flow looks like. We're going to do a little bit of tape reading. We're going to talk about some hot stock picks for this week and have the financial stocks lost their mojo. What happened? They led the entire rally and now they kind of haven't done anything for 2 weeks. And I'm going to give you my short sale of the week, a tech stock that did not have good earnings, that rallied a little bit last week, now pushed up into an area where I'm going to be looking to short sell the stock. If you understand short selling, you want to pay attention to that one as well today. We have a ton of stuff to talk about today. We're actually going to be setting up the week today, so stick around. I'll be back in just 1 second. Okay, so thank you so much for being here with me today, everybody. We have a lot of stuff to talk about today. My name is Pete Renzulli. Thank you so much for joining me on the Stock Market Live. If you're new to the channel, we do this every Monday, Wednesday, and Friday at 7:30 in the morning. I'm going to give you all the ideas I'm looking at this week. If you could do me a favor, type in what's in your game plan this week. Let's see what you're looking at this week, what sectors, what groups. We're just going to hop right into it. Let's actually go straight over into the market. Let's not waste any time at all. You can see what the market did last week. Now, what's kind of interesting is we're starting to see very clean higher highs, very clean higher lows. Now, one of the most interesting things, and we talked about this last week, is something as simple as a Fibonacci retracement level. The S&P 500, the SPY ETF, actually hit a really big level Friday on that big rally that we had on towards the end of the week last week, especially coming off of the hot tech stocks. Apple and Amazon, I think, carry the whole thing. NVIDIA and AMD are resting at breakout levels right now. But if you know Fibonacci retracements, and especially the way that we do things, there's two levels with the number 50 that we watch like a hawk. It's a really big part of whether or not we're choosing to be a buyer or if we're not buying anymore. One of them is the 50-period simple moving average on the daily chart, and the other one is the 50% retracement level using a simple Fibonacci tool. I'm going to show you both of those right now and how they're going to influence what I'm looking at right now and heading into this week. By the way, if you want to know the stock that I'm looking to short sell this week is IBM. We'll do a little bit more of a deeper dive on that. Earnings weren't good. They rallied a little bit, and now they got into a short sell. So talking about the SPY and the price action that we have now, you can actually see here the SPY actually doesn't have that much room to go until the next wall of resistance. We are going to bring in the 50-period moving average. So what's kind of cool here, and we actually talked about this over here, once a stock starts to flirt with the 50-period moving average and actually gets above it, generally speaking, the best type of price action that you want to see is it pushes through and then pauses above that best case scenario where we not only break above that level, but hold that support and also hold the breakout. So that's the first line in the sand for me personally. When a stock gets up to the 50-period moving average, if it could punch its way through and then kind of have a soft landing there and hold there, when the stock's price action does that, that now alerts me that it's something that I want to participate in the next move, because you have a really defined risk on that. And now it's just a question of mapping out your profit potential, which brings us to the second thing in the S&P 500, which is a Fibonacci tool. And it's reached a level that to me personally, it's like, okay, that's the last place that it's got to hold that level for me to still believe that the bears are in charge. So we're literally right on that equator, so to speak, in the market right now, where are we reversing or have we reached the extreme and now we're going to start to head in the other direction? Now, remember, we have 3 hot sectors that we're going to review today. We're going to go stock by stock. We're going to do technical analysis on them. We're going to read the tape. Give us some ideas. Remember, it's Monday, so we're setting up a game plan to trade for this entire week. So we're mapping out the entire week before the week even starts. So we're talking about the Fibonacci tool, and we start from, we're actually going to use it from here to here, right? That's the first place that we're going to go, which is the most recent move. So if we start here, which was the move, you can see here, that's all the way at the beginning of the year, from here to here, right at the 50% level is right at this resistance. And that's generally speaking. So what is kind of cool is I want you to basically take a look at the Fibonacci tool here, because it's going to dictate our level of aggression when we're looking to be a new short seller. And the deeper the pullback, so it pushes down, and the deeper it goes up, the less valid that previous move is. So it's kind of cool because you can see they're actually shaded, and I'm going to show you what I mean. So during this move to the downside, if you were looking for a short sale here, that still would have technically have been pretty aggressive or a little bit more conviction, because it did not pull back. But then you can start to see that we're actually working our way into other price action where we start to have a little bit less shallow of a pullback. And here's the big thing that I want to talk about right here. This day right here, and I want to zoom this out for everybody, because remember what we talk about. In order to trade successfully, in order to have that consistency that we all crave, right? We want to have that control, the conviction, the confidence, right? It's more important to know what you're looking for than it is to know what's going to happen next. And that means when you know what you're looking for, you're never lost again. So obviously the way we do things is order flow and tape reading. But a big part of what we do also is, if this happens, then I plan to do this. So in other words, it's also saying, here's what's happening now, and here's what I expect to have happen next. Keep that in mind. It's very important for the price action right now. So we're taking a look right here, and we're watching this rally and push down. This should have broke this low, and it didn't. That was one of the first signs. Then this rally right here, which held this resistance, should have at least pushed down and definitely broke this level, should have broke that level. So as we're watching this price action unfold, and you could be doing the same thing now, obviously going forward, what should happen and what do I plan to do if it works perfectly? If what I want to see happens, I have to get in there and trade with conviction. If it doesn't happen, I have to take a step back and say, you know what, maybe I need to revise my plan for the day because what I wanted is not happening. And that's just smart trading. So here's the day everything changed, okay? So it pushed down, did not take out that low. Pushed down, and again, did not even take out this low, never mind that low. But right there, that day, that bullish day of price action, bearish gap down and a rally, bearish gap down and a rally, followed by a bullish gap. These 3 days here are where everything changed for the next couple of weeks. Now, that sounds awesome looking backwards, right? Well, we did call it. Go back to July 15th, I believe. We actually mapped all that out. We said tech stocks are on fire. Has the market bottomed out? You can go back and take a look at that. So now, as of now, here's the difference between somebody who has consistent success in the markets and somebody who knows everything but maybe is a little bit frustrated with the stock market. Right now, the probability of following through to the upside is good. We've got some really good price action, but I want to make sure we get across this, okay? So if you remember, we just said that we have a big wall of resistance here, and the stocks and the market just rallied pretty hard, and this is a classic resistance level going back to where stocks turned around. So if you remember what we talked about probably around 2 weeks ago, we said that there's a very big difference between risk reward and probability. Now, what's kind of interesting right now in the chart of the SPY and a lot of the tech stocks that we're looking at, the probability of following through to the upside is very good, but the risk reward is not. So think about what we just said. There's order flow and tape reading. Order flow is the odds of it moving in that direction. It's the probability of it moving in that direction. After you have order flow, right, probability, then you have to say, okay, what's the risk and what's the reward? So right now, the risk and the reward are a little bit extended. So that means that we need to find some ideas right now that are still what we call pretty close to the optimal entry. So if you find yourself where you're in the right ideas, but you're always getting stopped out, it just means that you need to work on your position management a little bit. And that's just a fancy way of saying dip your toes in to get feedback before you get full share size. So I want to be clear now. It's Monday. It is 2 hours before the stock market opens. I believe that we're going to have a little bit of a pullback in the market for the next couple of days, but that doesn't mean that we can't find some good opportunities. Industrial stocks and industrial sector, in case you didn't trade Caterpillar last week or see the good news on Boeing, they had some really good news. Boeing averted a strike. Caterpillar has earnings scheduled for tomorrow, for Tuesday, August 2nd, but Caterpillar was on fire last week. And these are the little things that you need to pay attention to. And I'm going to show you that right now. So Boeing has been one of the top stocks that we've been trading in the industrial sector. And you can actually see the big pushes that the stock, look at the size of the energy candlesticks and look at what Caterpillar did on Friday. This was just absolutely amazing. Just to give this price action a little bit more context. And you can see it was up 5.5%. It was up, I think it was up 11% at one point on Friday. And you can see the earnings coming out. So digging our way a little bit deeper as we're watching these stocks. Now, if you learn to stack the order flow the way that we teach you to do, you start to notice which stocks are doing something unusual and how long have they been doing something unusual. Is it just one day? Is it 2 weeks? How long has that been going on? Now, if you've been a regular viewer of our channel, and hopefully if we're providing value, do me a favor, make sure you hit that subscribe button. Caterpillar had 20 out of 21 days where it closed red, which means that it opened and closed below that. So sellers were in charge of Caterpillar for 20 out of 21 days. We'll just take a look at that chart there just to give you an example of it. So in this window right here, you can see the lone green candle over here. All of a sudden, we had what we call here a bottoming tail. You might call that a gap to the downside as well. And now all of the green candles are coming in, completely reversing all of this selling. So the clues that I want to give you as you're watching sector rotation, as you're looking for the best stocks to buy now, you're looking for the hot stock picks, right? Start to read the notes within the music. Now, I'm not a musician at all. I think I'm tone deaf, but I love to sing. You have to notice the big picture, and then you start to dig a little bit more into the candlesticks, which is why it's very, very important when you run your scans at night to make sure you pay attention to not only change from the previous close, but change from today's open. Change from today's open in any stock that you're looking at tells you if it opened here and there's a big green candle or a big red candle, that means where it opened, buying pressure was in charge of that stock for the entire day, or the opposite of selling pressure. So you can see the buying pressure that was in Caterpillar here on Friday, and we've had quite a bit of days like that in Boeing where you can see these larger green candles. So what you can actually say is Boeing has been in play. Caterpillar is in play. Now we got Caterpillar earnings tomorrow, so we got a little bit of trade management that we have to work around. You have to decide, do you want to trade that stock into earnings or after earnings? The way that I usually teach it, we wait for earnings to come out, we wait for the dust to settle, and then we hop on that ride for the next 3 to 5 days, which we actually were able to do in a lot of the tech stocks last week. So let's take a little bit of a deep dive into a couple of things. First, we want to talk about sector rotation, and you can see what it looks like heading into today. Today, we're actually going to focus on energy. We're going to focus on industrials, and we're going to focus on basic materials. The one group of stocks that have taken a pretty big hit over the last week and a half, really the last month, has been communication services, which includes Meta and Snap. Both of those have really taken a pounding over the last week or so, and they have not shown any kind of buying pressure at all. But I think the one thing I do want to talk about, and I really want to start out with this, I'm just going to put the agenda back up here again so everybody can see where we're going with today's conversations, is there's been a monster debate right now about, are we in a recession? Are we not in a recession? What is the definition of a recession? So if you're going crazy over there right now, trust me, you're not alone. We're having conversation after conversation about this in our community right now. And this is, the Wall Street Journal, again, for it to make a headline article in the Wall Street Journal, what is a recession and are we in right now? That tells you that you're not going crazy, because if it's reached to the point where every major publication, and obviously the Wall Street Journal is one of the longest tenured and one of the most respected out there, If they felt the need to do an article on what the heck is a recession, there's way too many people saying that the definition is being tweaked right now. Now, again, I'm not going to make this political or anything like that. We're all friends. We keep politics out of this. But you're starting to see a lot of things come out of Washington right now where they're tweaking the definition of what a recession is. And let's just say it what it is. They're trying to soften the blow of the fact that the textbook definition, anywhere you look prior to the last 2 weeks, was consecutive negative GDP. That's the technical definition. That is what a recession is. And everybody up until even Janet Yellen, you can find it anywhere. Janet Yellen saying that is the textbook definition of a recession. For whatever reason now, we're afraid to talk about it. Who the heck knows? I don't know why. It is what it is. Can you just let the stock market do what it's supposed to? So what does that mean, right? This is really the most important part. What does it mean to have that textbook definition of what a recession is, and how should you handle that? Well, I'm going to hit you with something really hard right now, right? The way that we look at things, and the way hopefully I'm teaching you to look at things, and I'm talking like an Italian right now, the way that we talk about things is you need to make your own decisions. If you were constantly reading the headlines over the last 45 days, now this is the start of August 2022, all we heard for 45 days was Michael Burry was right. The stock market's going to crash. The big stock market crash in 2022. And look, it might still happen, but we've had 3 weeks of rallying while this whole recessionary conversation is going on. But this is the price action that we're getting. So if we're taking a look at the market and how we should be trading the market right now, this is what's going on and what we should be doing. We should only be paying attention to what the market itself is telling us. So that's why we're talking about sector rotation today, because sector rotation is paying attention to what is the current order flow and how do we trade that current order flow. So the biggest suggestion I want to give to everybody is you need to learn how to make your own decisions. Absolutely read as much as you can. Absolutely watch YouTube videos like you're doing right now. But you have to come to your own conclusions, because that's the only way that you are going to have conviction to hold your good trades longer, because you did the work yourself. Now, is it hard to do the work? No. You just look at it and say, is it going down? And if the answer is no, the headlines don't matter. But that brings us to another thing. You need to know how long you plan to hold the trade. Are you an investor in stocks, or are you a trader in stocks? If you're trading, you're probably reading order flow on a little bit shorter time frame, which is what we're going to migrate over to right now, which is the 3 sectors that we're talking about: industrials, energy, and basic materials. So we're going to quickly take a look. First, before we do that, we're going to go over to the electric vehicle stocks. I promised that we're going to take a look at that. And the story of the day is these guys, NEO, XPEV, and LI, all producing big numbers. So we want to take a look at that. Now, I want to be clear about this. It is for educational purposes, but I want to give you some like the insights of what I actually do. I love to trade the Chinese electric vehicle stocks. I'm not swing trading them per se because of all of the backdrop of what's going on with the government and how they could change their mind at any minute. It's much more of a shorter term trade for me. And if I do any kind of swing trading, it's maybe 1 to 3 days with those stocks, just because I don't want to be exposed to potential news like that, where in a heartbeat they could change their mind. And look, they can do whatever they want. We have to choose how we want to trade them, right? But I want to tell you, for me personally, LI, let's actually pull the stocks up. LI, and you can see it's actually up 3%, 3.4% at this point. NEO up 2.74%, and XPEV, which is well below the 50-period moving average, is up 2.8%. So I want to be clear about this while we have these guys up on the screen right now. I'd love to trade XPEV. It's been one of the stocks that I have been the most consistent in. I seem to have a really good read on it. So now we're going to see if the Chinese electric vehicle stocks, and quite frankly, some of the other electric vehicle stocks, Ford had a big dividend announcement last week, which was pretty exciting. Are the Chinese electric vehicle stocks finally going to buck the trend where they have good delivery numbers year over year, not quarter to quarter, year over year? They were pretty darn good. Will they finally hold the bid where buyers step in and say, now is the time to get involved in those stocks and hold that bid? It's going to be pretty interesting. So here's the play for me for this week with the Chinese electric vehicle stocks. I'm going to use XPEV as an example. So XPEV right now is trading at 25.12. 12. So if we map this out, and let's just say it's right over there, right? So if you remember the swing trade ideas that we've been walking you through as stocks have been reporting earnings, we've been saying let that stock open up wherever it gaps up to at that point. That's going to be the line in the sand. That's going to be how we're going to be tape reading in that stock, and that level is going to ultimately determine whether or not we see buyers remain in that and step up. We had some examples last week in Apple, Amazon. Both of those held the bid last week, right? So my game plan for this week, wherever XPEV opens this week, and you can do the same thing with any of the Chinese electric vehicle stocks or any electric vehicle stock, but I'm focusing on them right now because of their deliveries, is I'm waiting for the day to play itself out. And then by the end of the day, if the stock is trading in the top 10% of the day, obviously that means it's above the opening price, then I'm going to be looking to initiate a position at that price with the opening price today, which is going to be that higher opening, which is going to be a bullish gap today if they open where they are right now. And that's going to be the trade from Monday through Friday for this week. So I thought it was kind of cool to map out the trade in those stocks if the buyers step in and stay there after the market. Now, what's interesting about this is normally they were rallying into that kind of price action where the deliveries would happen. And we would see these kind of moves where it would rally and the news would come out and the stock would sell off. But this it's a little bit different. We've actually been selling off for almost 4 weeks into the delivery numbers. So it's a little bit different. Everybody knows the buy the rumor, sell the news kind of thing, where normally they've been rallying and then the number would come out, it would go up and go down. So we're waiting a little bit more during the day today, waiting for some confirmation for those stocks to hold the bid. And then the end of the day, we kind of have a really nice risk reward and potential trade for the next 5 days. So that's how I'm going to map those ideas out. Now again, remember, if then, right? If this happens, then I plan to do this. If those stocks open higher, trade down, and again, let's say this is the opening price, and they're down here below the opening price at 330, 345 today, I'm not trading them. They have to do what I want to. Remember, it's more important to know what should happen next or what will probably happen next and what you definitely plan to do. So if we're talking about swing trading stocks and specifically these stocks based on the good delivery numbers from a year ago, if they open higher and trade lower, I'm leaving them alone. So don't email me later. Don't write me later and say you were wrong. I might not even be in the trade yet. So it's super important that you keep your trading simple but structured, above the opening price and closing in that top 10% in order for me to look at a new swing trade in these Chinese electric vehicle stocks at the end of the day. Now, let's work our way over into some of the other ideas. We said we're going to take a look at energy stocks first. So we're going to work our way over into the list of energy stocks, and we're going to go right here. So obviously, some of these had some amazing moves. Chevron was actually at the top of the list. And again, just to give you an idea of what we're talking about, this is exactly the kind of price action that we're looking at to see happen. We're opened here and traded above it for the entire day. Now, obviously, we have the next level up here, which is this level around 173. So we have roughly $10 now coming out of Chevron and Exxon, which actually had a pretty big move as well. So what we're going to be mapping out right now is you have to determine which of these stocks meet your goals, meet your resources, and quite frankly, meet your risk tolerance. So I personally, again, these are educational videos, but I want to give you some insights into what I like to trade. Chevron and Exxon, for me, tend to be a little bit easier for me to read. The order flow, the price action, the spreads between the bid and the ask, and the consistency, I find them a little bit easier. But I want to give you a list of other ideas that might not be too far from the optimal entry in the energy stocks because of the earnings that came out last week. So we're going to go through the list of stocks, and you can get an idea of which ones. PBF actually has a pretty decent amount of space to go, up to 43 and change. Oxy was a big conversation over last month where Warren Buffett had kept talking about Berkshire Hathaway building up a big position. Now, this is an interesting one here because although it's near a breakout level, it does not have a lot of room to go. It's got maybe $5. So $5 has to be your initial profit target. So how much risk should you be looking? Obviously, ExxonMobil, APA. Now, what's interesting is take a look at where Exxon is, well above what we just talked about before, the 50-period moving average. APA is not. DVN is just hitting that level, okay? Well below it here. Schlumberger well below it. So as we start to take a look at the energy stocks, for me personally, because of the size of the move that happened last week in Chevron and Exxon, I will be looking at them on a little bit shorter time frame for some cash flow. But because of the size of the gap and the earnings, which were fantastic last week, for me to put on a new swing trade, remember, there's order flow, there's tape reading, and then there's the optimal entry. The optimal entry is the moment where the reward potential is the greatest. So because ExxonMobil and Chevron had that big gap on Friday and followed through all the way up to the high of the day, I personally, for a new swing, I want to see them pull back for a day or two, because if this is what it normally does, and this was eaten up on Friday with the bullish gap and it just kept going, I need to expand the distance between my entry and what the stock normally does. So I want to increase how much I could make on that, which means this big push up, I just need them to pull back for a day or two. So if we're looking at Exxon and Chevron, you can see how far they've gone now. Exxon ahead of earnings, 1, 2, 3, 4, 5, 6 days in a row, including this bullish gap. So remember what we talked about before on the breakout. We're actually looking for this now to pull back for a couple of days, close above the 50-period moving average, and then look for from here, probably around 93, 94, up to probably right around this 104 level. So roughly a $10 window. And the same thing in Chevron. So you can see here, actually 1, 2, 3, 4, 5, 6 days plus this gap. So I'm looking for Chevron to pull back somewhere in this area around 156, and then look for the run to 176. So the next group of stocks we'll be taking a look at are the industrial stocks. Okay, now I'm not going to look at utilities. We actually got a question about that last week. Why do I keep skipping over the utility stocks? Well, as an active trader who's looking to take some cash flow out of the market on a regular basis, utility stocks, there's nothing wrong with them, but for me personally, they don't move enough. Their volatility and the consistency of that volatility is not strong enough for me to have my attention. So I just go over that and I go to the next group of stocks where I think that I have a pretty good chance of every day seeing those stocks move. So now we're going to work our way over into the industrial stocks, which is this list right here. So again, energy stocks was the first group. Now we're going to work our way over into industrial stocks. And we already talked about what Caterpillar did last week. So you can actually see here. Now, the big thing with Caterpillar, and we have to discuss this, earnings is scheduled for August 2nd, which is tomorrow night on Caterpillar. I am not going to hold Caterpillar into earnings because it's already rallied basically from 180 to 198. So it's almost a $20 rally in just a couple of days in Caterpillar. And it's also right at this big resistance level. The better opportunity where risk reward comes in is I'm going to actively short-term trade this, meaning day trade this stock today. Tomorrow, let the earnings come out, and then I'm going to look to put on a new trade up to this area, assuming earnings are good. But let's go through some of the other stocks. Now, UPS, this is an interesting one. If you know what we normally talk about, we have two different kinds of volume that we look for on the charts. One of them is called fuel, and one of them is called exhaustion. And I purposely named them so you know mentally which one are they. Are they starting a move, which is fuel, or are they ending a move, which is exhaustion? Fuel typically starts when a stock is breaking out of a trading range, going sideways for a while, has a big energy candlestick with increased volume. So if we take a look at what UPS did on Friday, and if we drop volume in there, you can see that over the last couple of days coming out after earnings, the stock has had some really good price action. Now, we got two different types of trades here. Do you chase this stock after earnings, which is now up 176 to 196? It's up $20, but clearly broke out and clearly has fuel coming out after earnings. So I will tell you, I am looking to trade UPS this week, but I'm not looking to chase a $20 move because that's too far from the optimal entry. So again, we have to be smart and look for ideas that are breaking out now so that there's still reward potential and we're not buying after most of the profit is already gone for the next swing trade. So again, I'm looking to work a position, build a position as UPS pauses for a couple of days, and then I'm going to be looking for that new swing trade. But you need to know the price action. So remember this, we're talking about this trade probably 2 days before it's going to happen. So this is the big thing about having a work list of stocks in your game plan is you're never surprised, you're always ready. So now a really advanced tip is if you want to get the best price period, is to put a limit order in the market. And this is the way I do things, where if it rallies up and we know this breakout level here, which was significant, stop, right? Came right back in, right around 187, somewhere in that area. So right now it's up above that, but 187, 188 is basically the breakout level. So what I will do to be alerted of that, you have two ways of doing it. You could set an alert if price closes below or trades down through 188. So it pops up onto your software. And now you got a good support level and you have that breakout. So your risk and your reward is mapped out and you're looking for the catalyst from earnings to push it through. An advanced way of doing that is, let's say right now it's up at 196. You put a limit order to buy the minimum amount of shares that you're comfortable with. For me, that's 100 shares. I just want that to pop into my watch list, my position summary. So as it goes down, if it goes down and hits that 188, which is $1 in front of that support, I'll get filled on that really minimum position size. Now it pops into my summary, and now I know that it's a stock that meets my criteria, and then I'll evaluate that for a new idea. So UPS was a pretty interesting breakout, okay? All right, hang on just 1 second. All right. Okay, so UPS is one of them, and BLDR. Now, what's interesting about these guys again, so if we get into some of the home builder stocks, and you can even drop Lowe's and Home Depot in there, again, getting back to order flow and tape reading, so many people are reading the headlines about mortgage rates going up, applications going down, prices are coming down, and yet the home builder stocks just continue to climb and climb and climb and climb. There's news that there's hedge funds buying them for rental properties and that kind of thing. Again, reading the order flow, making your own decisions versus reading the headlines and making the headlines give you what to do. Headlines are great, be informed, but you have to make your own decisions, okay? So BLDR now has rallied right up to a resistance level. And we're going to take a look and see in this sector here how much room is there to go. So you can see now between here and here is the next trade. But the big thing here is that we keep nailing this level and stopping. Now, Friday was pretty good. We had good earnings. We have earnings coming out today, actually, and you can see where it is right now. It's all the way up to 73 and change. So this is kind of interesting. If we map out where the stock is right now and where it could potentially go based on what it normally does, it's all the way up here already. So at 73 and change after earnings, if this was the profit potential, actually, that's a really fantastic visual. If this is the profit potential on this breakout, but now it's already up here based on where it is after earnings, you can literally see that 50% of the profit potential has already been taken up. So that's a pretty good visual of how much is realistic for me to make on this trade versus what I need to risk on this trade. So if we're looking at this idea and we're talking about 73 and change up to 78 and change, that means that there's $5 to the initial profit target. So if we're looking for a 3-to-1 risk reward and there's $5 likely for the next move after this gap up, 3-to-1, you really can't be risking more than $1.50 on that trade, just doing the basic math. So it's kind of cool how probability plays into initial profit target, and then that is how much dollar amount we should be looking for the stop loss from our entry price. So that's going to be kind of interesting to see where that one opens up today as well. So if we continue along in the industrial stocks, 3M actually had some pretty good price action recently as well. You can see the gap here, now above that all-important 50-period moving average. The challenge here now is this was the optimal entry. So we had this big move to the upside. We had a pullback, and right here, right around 140 was the optimal entry. Now, that's not that far extended, and if you really want to take a look and see where did sellers do something significant, probably around the 150 level. So you have roughly $8 profit potential on that stock. So those are the few that I'm watching right now. The other one that's actually been pretty good that has been in play right here is General Electric. General Electric actually holding the bullish gap after earnings pretty well. Not only holding this bullish gap, but another bullish gap. And you can see the target up here roughly around 79. So GE has another $5 or so left on this trade. So if we work our way over into basic materials, now this sector has not really performed that well, but this is why we do the raw data and let the stocks themselves tell us what they're looking to do. So if we do a little bit of a deep dive into basic materials and look for some ideas for this coming week, we want to get into here, and we're going to do a run through some of the ideas that are some of the most profitable. Now, What we're talking about now is, and I want to be clear about this, this is why we do the sector rotation every single day after the market closes. We need to see stuff like Caterpillar. When those things are exploding, we need to know. We can't be reading about it 2 weeks later. We have to do the price action, the volume, the percentage move from the open, and say, okay, if I'm going to look at some stocks this week, which stocks right now are showing smart money order flow? So the basic material stocks, while they made their way up the list, they're coming off the bottom. So this is really the first time that these stocks are reversing. They might not be a swing trade yet, but they're stocks that need to be in our game plan. So we can't fight the data. If the data is telling that right now, basic materials over the last 5 days, over Friday, and over the last 21 days, they're showing buying pressure. We now have to go in and say which stocks should have our attention. And that's the list we're going to take a look at right now. So if we do a little bit of a deeper dive, you can see tech is still clearly bearish, still clearly below, but it had earnings and good volume breakout. We also have a failed test of the low here. So we have a lot of reasons to potentially looking at tech. And if you know how we break down stocks when we do a potential change of trend, generally speaking, we're looking to measure the trend that's going on. And once it breaks the trend, then that stock typically goes into a box. So if we take a look at this particular box here in tech, we actually are breaking out of this box right now. And that was the box right there. And that's pretty interesting. So is this a bullish idea yet? Now, one of the biggest things that we want to talk about here, and I want to bring this up on the screen because this is the stock market power pyramid where you have conviction. This is a part of order flow stacking. So I just want to show you this picture and you can take a snapshot of this. This is a part of what we teach when we're talking about the power pyramid. We're looking at the markets. Are the markets obvious? The answer is clearly yes over the last 3 weeks. Now we're going up one layer into sector rotation into the major sectors. So when we're breaking down the sectors the way we're doing it right now, that's the picture that we're looking at here. We're going one layer higher. So if you take a look at what the sectors are, one step above the market in the power pyramid, which is this. So now we're taking a look at basic materials and industrial stocks, right? And energy. So we're looking at that. From there, then you start to break it down a little bit deeper into, okay, basic materials are strong. What industry groups within basic materials are showing the greatest strength and matching what the market is doing? And then you go and find the other ideas in that group. So what we're looking at right now is we're seeing the first time some of these stocks are bouncing. Some of them are 3 weeks into the move right now. And you can see that steel stocks actually showing a pretty good move. So STLD now coming out of this pause a couple of days after earnings is having a pretty good move. Now, what should be super interesting and super obvious right now about even just this chart STLD? Well, I gave you a bunch of examples of that earlier, including the SPY. And this is really where you need to start to put the pieces together for how to make money. And I'm going to go back to the chart of the SPY so that we can come back to this chart of STLD. So you have a visual of what we're looking for to put the next trade on for STLD. So if we go back to the SPY, and we talked about how the SPY broke above the 50-period moving average, came back, not only held the 50-period moving average, but held this breakout level perfectly right there, led to this move. If we take a look at STLD, it's doing exactly the same thing. It rallied above. Here's the breakout. So we're looking for is this stock to pull back to the 50-period moving average after having rallied now for 5 consecutive days. Now remember, buying 5 days after the move started, you're kind of way too far from what we would call the optimal entry. So in this case here, we're looking for STLD to pull back, hold that 50-period moving average, hold that breakout level. So now our risk is super obvious, right? It's very well defined. And then we're looking for the next push higher. Now, the question is, what would the profit target be on that STLD trade? And that really comes down to what does the stock normally do and what has it recently done? So this move right here basically went from 76 to 88. So that's roughly a $12 move. This move was roughly $12 as well. So if we hold this breakout and at 74 and we add $12 to that, the next target should be up in this area right around 86 after this thing pauses. So that's the breakdown of the ideas that we have for this week. I want to talk about one stock that I mentioned before, which is IBM, if the market shows some weakness. IBM actually rallied this week after getting clobbered on earnings right now. And this rally right now is setting up a short sale for me. Now, it's actually up a little bit higher today. I'm actually looking for IBM to open higher and then give me a short sale opportunity down towards this area around 125. So I'm basically looking at a trade of around 131 to 132 down to 125 as a short sale in IBM this week. Okay. The only other sector that I want to point out and make sure that we talk about is Citigroup and some of the financials. Now, what's interesting about Citigroup is they had amazing earnings and they kind of carried the entire market and they kind of lit the fire on the rally, but it really hasn't done anything in 2 weeks. So Wells Fargo and Citigroup are going to be the two top stocks that I'm going to be watching this week in the financials. Both of them actually rallied really strong. They're kind of catching their breath right now, pausing a little bit. Both of them are above the 50-period moving average, which now tells me buyers have stepped up and they're holding that price. Those are the trades I'm going to be looking for potential breakouts this week because they're still pretty close to the optimal entry, which you can see both of them here have now paused, and we're looking for the next breakout. So there's a lot going on. You might want to watch this video more than once. There's a lot to talk about this week, but I gave you the top 3 groups that I'm going to be looking at and the Chinese electric vehicle stocks. The only other group of stocks that you should really be paying attention to this week are the solar stocks, which had some news last week about from Washington, and you can see the gaps that they had. So ENPH, SPWR, JKS, Nova, and Run is the last one. So that's the big group of stocks that I normally trade and keep an eye on. So there's a ton of stuff to go on this week. You might want to watch this again. We gave some very definitive swing trade scenarios this week on how we plan to hold them, how we plan to look at them, how long we plan to hold them. As I said, with the Chinese electric vehicle stocks, there's a lot of news outside of just their deliveries and their earnings from the way their country regulates companies, I guess is the only nice way to say it. So I'm not really holding those long term at the moment. I'm trying to capture that short term momentum. So if we did a good job today, please do me a favor. Make sure you click down and subscribe and let me know how you're trading today. Let me know what's going on. If you have any ideas that we didn't discuss today, post those below the video. I'd love to hear from you as well. Have an awesome day, everybody, and let's make it an awesome week of trading. Take care now.